please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. Well, the market is weak. We're down about 34 points on the Nifty, about 60-odd points on the Sensex. But, of course, this is a lot better as compared to this big sell-off that we saw, the accelerated selling that we saw yesterday. You know, before we move any further, we'll bring in our technical analyst. We'll put out trades, as always, on the top of the show. I want to highlight two things which seem to have changed in the very near term. The first, and this is simply looking at, charts, but they do give a very near-term, short-term kind of an indication of where the market might be headed. I think one has to ask the question, have we seen a bit of a reversal on the charts? So there was an upward sloping trend line all the way from the lows sometime in late June, I think 27th of June or so. If you plot a trend line, a channel trend line from the low of 27th of June, which I think it's about 10,457 or so. The next graphic has the number, 11,495 or so. That trend line, basically as of yesterday's big bar that we've seen, that has broken the base of that channel. So that's point number one. It is usually seen with a bunch of other things, so I'm not going just by that. And the second thing is that we've now been, for the second time over the last couple of months, seeing what is essentially called a price divergence. Indicators derived off of the price are moving in opposite direction as compared to the price itself, which, in this case, it's not a positive divergence, it's a negative divergence. Positive would be if the price actually is declining and these indicators are not. That would mean that, it's a positive divergence and the price would eventually pick up. This is the opposite. And we've had three of those. It's a triple three times it's happened over the last one and a half odd months or so. And that is watched pretty keenly. The last time we had this was in the month of May, and at that point the Nifty sold off about 5% or so after that. So let's see. Let's keep our fingers crossed and see if these things come to bear. Remember, the reason this may seem to gain more spotlight this time, of course, is also the fact that the macro backdrop, oil, yields, rupee, everything is, of course, sitting a bit in a bit of an adversarial kind of a position, and emerging markets, etc., are looking a bit jittery as well. So just wanted to highlight that purely on the Nifty, and then of course we'll broaden the discussion in just a bit to talk about the rupee, etc. as well. Ekta, morning.
Hi Prashant, yes, absolutely. That's on the technicals of the market. But for today, just talking about what exactly is happening with the mid-cap index, there's been a stark underperformance. It started seeing that sort of underperformance in yesterday's trade, just about in the last hour. And that seems to be continuing into today's trade. In fact, at the low point of the day or thereabout for the mid-cap index, down around 1.4%. Advanced decline ratio also very, very weak at this point. So just about one stock advancing to around two stocks declining on the National Stock Exchange, and a similar kind of advanced decline ratio on the Bombay Stock Exchange as well. But a lot of stocks in focus. It seems as though the stocks which are in fact enjoying the rupee depreciation are the entire IT space as well as the pharmaceutical space. So around 40–50% gains year to date for a couple of these stocks. So do keep your eye out on the incremental gains that we're seeing there. Lupin, which is down around 1.7%, but Sun Pharma, which has gained 15% year to date, and HUL, after that big steep fall yesterday, we're seeing further pressure in today's trade. So down 3.7% currently for HUL. Jet and the others should come up for you from the broader markets. Those stocks seem to stand out in today's trade. But let's get in some F&O strategies then. We have Gaurav Bissa joining in to tell us what he's analyzing. Gaurav, over to you then. Stocks as well as index, what are you recommending?
Good morning. As far as indices are concerned, we are seeing some amount of pressure yesterday and today. There has been significant fall, and they have broken multiple supports, as Prashant was saying earlier, that the falling trend line that has been on the verge of a violated. If you look at the longer time frame, the supports are seen at 11,490. These are the levels from where we saw a swing high being made. Also, some amount of breakout was seen in Nifty after a small consolidation. So that is what we expect. Nifty can head towards 11,490, 11,500. If you look at the option concentration, 11,500 put option is commanding a good amount of concentration. So we expect a small halt happening on those levels. If it again violates those levels and trades below, then there's a possibility we may slip towards level of 11,350. Similar is the case with Bank Nifty. There was a strong breakdown below 27,750. We gave a sell recommendation to our clients as well. It's now trading near the levels of 27,500. That is a support level. If you look at the option chain, again highest concentration on the weekly put side is at 27,500. A small halt can be expected here as well. For the time being, it's a sell and rise market. As long as Nifty does not close above 11,620, 630, I would not be talking of fresh momentum picking up. It would be sell and rise for the time being. The ideal strategy would be to sell near 11,590, 600 spot levels, play for targets of 11,500 and stop loss of 11,630. As far as stock specific recommendations are concerned, the first recommendation would be sell on Havels. We have seen strong move coming in the name, but now today we have seen short positions getting built to a tune of 3%, 3.5%. It's fallen down a bit. I would recommend selling near levels of 698, have a stop loss of 708 on the downside, targets of 680 can be seen. Second recommendation would be buy on Reliance. We have seen almost 100-point correction coming in Reliance. It has bounced back from the immediate support levels of 1220, 1225. Today 2% O addition has been seen at a time when Nifty is weak. We are seeing some longs getting built in the name. With a stop loss of 1230, one can buy Reliance futures, target of 1270. And final recommendation would be buy on Power Grid, bouncing from the immediate support levels of 193, 192. And some amount of O addition has been seen. A slow mover, low beta name. Even if Nifty sees a small dip, this stock is likely to see some amount of stability. On that premise, one can keep a stop loss of 118.5, buy Power Grid futures for target price of 198.
Okay, all right, Gaurav, we're going to let you go on that note. Thanks very much for joining in. So there is further amount of appreciation intraday which has taken place for the rupee. So 71.14 is where it's at. It had depreciated a little over 71.3 on an intraday basis. So there's some amount of pullback which is taking place. So Darshan Sukhani joins in to discuss the technicals further. So Darshan, over to you then. What exactly would your recommendation be in terms of stocks, index and your call on HUL?
Well, yes, for the index, the Bank Nifty is a complete avoid. It was so yesterday and continues to be today. The Nifty could be a buying opportunity should there be some sign of strength. Let us not discount that we are in a strong bull market. So we'll buy the Nifty if and when it crosses 11,600. That's the threshold for today. If it crosses that level, I would be a buyer and carry my positions also. But for the individual stocks, there are opportunities on both sides. IT and pharma continue to give us buying opportunities. Consider buying Tata Elxsi. You could really have a range of companies in the IT sector which are giving opportunities today. So I've just selected Tata Elxsi as my choice for this, as of now. The second buy idea is Glenmark. Same story, pharma. I've been very upbeat on pharma. So pharma and IT continue to outperform and shine. These two companies belong to these two sectors. The third is Canfin Home, which is a short sell. It's an intraday short, but go and short it. Some housing finance companies are in deep trouble on the charts. Canfin Home is in one of them, breaking support levels. So go and short this one for the day. Hind Unilever is a buying opportunity. Do not get worried about these 1 day, 2 day declines. Good quality stocks should be accumulated and bought when this happens.
Okay, we got questions for you, Sudarshan. So this is Kannan who's asking about Bank of Baroda. He's got 200 shares of BOB. His cost is 139. Stocks at about 149 or so now. And he's got 500 shares of Power Grid. He's paid 197 rupees for those. Wants to know whether you should hold or sell to BOB and Power Grid. Your sense?
I think you should hold on to BOB. PSU banks are going through a pattern development which suggests higher levels, at least in the short term. He could even get 170. So whether he gets that number or not, at least the pattern suggests that the theme is bullish, especially so in Bank of Baroda. So hold on there and see where you can reach. He should also sell Power Grid. There's nothing in Power Grid. It had a big decline yesterday. Apart from that, it's facing resistance. It's underperforming the market. So that's the best trade there is to sell it and get out.
Okay, we have one more query for you. Shravya Srinivas has 460 shares of ICICI Pru Life at 424.5. Wants to know the target he can keep on the stock.
Well, if you're a long-term investor, you just hold on. You don't think of targets. But for the short term, an immediate target is 425, which would bring the price to where she had entered. So 425 is an immediate target. I think you should hold on till then.
Well, nothing much to incrementally talk about for the Nifty. So we have the Nifty, which is down 25 points, Bank Nifty down 225 points. And there is some update coming in where TCS has now become the most valued stock in terms of market capitalization on the index. I was just in fact looking at the TCS stock a couple of minutes ago. Currently, it's at around a little over 2,000 odd rupees. The stock has now gained around 54% on a year-to-date basis, and it is in fact the best performing stock just after Bajaj Finance on the index on a year-to-date basis. So as of now, it is also the most valued in terms of the market capitalization that TCS currently holds, gaining even further today, up around 1.8%. But Manisha Gupta now joins in to discuss exactly what she's tracking in the commodity and the currency space. Well, Manisha, over to you. It's all about crude as well as currency.
Oh, it is. And those two things rather are keeping the markets on the edge. But crude oil prices definitely, because we've seen nearly 10% gains in last 2 weeks and we continue to surge on the higher side. We have seen a lot of triggers on the positive side which have been keeping the prices higher, like the Iran sanctions. You also have seen supply concerns from many of the OPEC countries like Venezuela, Libya, Algeria, etc. And then, of course, it is about the hurricane season approaching US as well. And there is a storm, Gordon, which is expected to make US landfall as a hurricane today itself. Remember, nearly 16% of the fuel output in US comes from Gulf of Mexico, and a couple of platforms being evacuated in preparation of the first hurricane of this season really does add to the supply concern. So you have the US crude oil prices trading on the higher side, but the Brent on the other side has seen a bit of a weakness. This is after India has allowed its state refiners to import Iranian oil if Tehran arranges and also ensures the tankers that really has pulled the prices slightly on the weaker side, because the expectation is that the two major Asian consumers, India and China, might go against Washington's directives and continue to import crude from Iran. So that is what has taken the Brent prices slightly on the weaker side, flat on your screens really, but $78 is holding. It is the NYMEX or the US crude which is trading 0.5% on the higher side, and that really is because of the hurricane season approaching. Concerns on how much of supplies can actually get offline if there is some concern really continuing in case of Gulf of Mexico. Reza Amanat now joins us to talk more about that space. Reza, hi, good to have you. First of all, about the hurricane season, which has taken the US crude prices to $70. What kind of supply concerns are we seeing from that, and where do you see the prices headed?
Hi, yes. Well, we're at the peak of hurricane season at the moment. And obviously, the tropical storm Gordon is a bit of a worry because it looks as though it might make landfall in parts of Louisiana, which, as you know, it's an important refinery hub for the U.S., but it's also, since 2015, end of 2015, when the U.S. lifted its ban on crude exports, it's also a key export hub for certain types of U.S. crude, especially medium and medium sour and medium sweet types of crude, which have been coming to Asia, including India and China. So it could have a significant effect both on the local refinery sector in the U.S., on the East Coast, and also on U.S. exports that have been coming out of Louisiana.
Yeah. You know, Reza, the other bit of news really is about the Brent crude oil prices, where India has now allowed its refiners to keep importing from Iran, considering if Tehran can arrange and ensure these tankers. How are you reading this statement? Would it really mean that the two major Asian consumers will go against the Washington directive?
Well, I think it's an important step, but I think it's just India reaffirming its sovereignty and its right to secure its energy interests. Clearly, India and Iran have had a long-term relationship in terms of energy, and it's geographically, obviously, it's one of the best countries for India to import from because it's not too far away. there's an abundance of energy there in Iran, and the trade is very rational. It's a very rational trade between the two countries. Obviously, we are going now back to the status quo of pre the nuclear deal, when under the previous sanctions, India was receiving Iranian crude on a delivered basis. So the National Iranian Oil Company was using its own crude tankers to deliver the crude, and it would insure the cargo while that cargo was being delivered.
Okay.
One of the extra challenges that India had was that the refiners, domestic refiners that were running that crude, could not get hull and machinery insurance or reinsurance from European insurance companies. And so I think the Indian government at that time stepped in, and through the state insurance company GIC, they provided some cover for domestic refiners. So this might be something that they will have to do again.
Fair point. So this is not the first time this would be happening. This is just going back to the olden times then. So what is your sense then? Where are we headed in sense of the crude oil prices? Because there have been various reports that have come in last 3 or 4 days suggesting that we are looking at supply concerns. One, the market is tightening and the demand, estimates are on the higher side. Are you on agreement on all of these? And would you also say that higher crude oil prices really is in the pipeline now?
Well, I mean, we've been in this situation for more than a year now, where you have basically very strong for crude prices to go up, but also very strong reasons for crude prices to perhaps, be capped at about $70 a barrel. There's always obviously the issue of sanctions on Iran that will remove a substantial amount of crude, or has the potential to remove a substantial amount of crude. We have problems in Venezuela in terms of their exports going down. And then, as we said earlier, there's this, now we're in peak hurricane season, where you could see any exports out of the U.S. Gulf Coast being affected as well.
Sure.
So there's quite a lot of fundamental reasons why supply might be affected or supply might be tight. But on the other hand, you also do have this, continued growth in U.S. production. And so long as you don't have a disruption such as the hurricane disruption, you will get those crudes coming onto the market. The only issue the U.S. has now is pipeline capacity, but once that's resolved, say in the next year, more U.S. crude could potentially come onto the global market.
So maybe, Reza, maybe for the longer term, yes, the crude oil prices could consolidate. But for the near term, would you see 80 as a possibility? Because we already are trading above 78 for Brent.
Well, we're close to 80. There's no reason to think we can't reach there. I would just say that, we've seen it before. As soon as the crude price gets towards $80 a barrel, I think a lot of people start to feel uncomfortable. That's including OPEC producers. So.
Right.
If you see a sustained oil price above 80 or around 80, OPEC might feel as though they have to do something about it, and they might loosen their outputs even more than they have, or do away with the current deal which carries production. It really depends on how producers see the situation and whether they think it's good for long-term demand or not.
Okay.
Reza, thanks very much. Appreciate your views. Thanks for joining in. Manisha, thank you very much for taking us through that conversation. We also spoke with Jahangir Aziz, and not on oil, but what's happening with the rupee. Jahangir, of course, is with JP Morgan. Listen into a short bite of that conversation.
Whatever uptick in investment that we've seen over the last couple of quarters is not getting funded domestically. It is getting funded abroad, which is why the current account deficit is widening. In a situation like this, there is no other option but to bring down the current account deficit by the old-fashioned method, which is by reducing growth. I mean, there are two sort of separate things that are happening at the same time, right? There is the internal dynamics in India and what's happening in the external front. So if you look at what was happening in the external front from April, let's say up to sometime around end of July, I think that was dollar tightening or dollar appreciating, global financial conditions tightening, and I think that the emerging markets, including India, all reacted to that by letting their currencies depreciate quite a bit, do some sort of an FX intervention, but hardly any interest rate hikes. What is problematic of India is how that growth is being financed.
So there is recovery in the Nifty, which is setting in 11,571 if you can have the intraday, and maybe that is actually coming through with the rupee, which is starting to recover fairly sharply as well. So 71.1, it had crossed the 71.3 odd mark earlier on. So we are basically at the day's highest point for the rupee, that is. Kunal Desai of Mobius Capital Partners is now joining us from the sidelines of the IIFL's Invest India conference in London. Kunal, thanks very much for joining us. Let's begin by talking about India in the context of emerging markets. We've seen money moving out of emerging markets and money has gone back home to the US. And this has happened all through the course of this year. What is your broad view on emerging markets right now? And if you can talk specifically about Asian emerging markets.
One of the reasons why emerging markets recently have been under stress is largely through some idiosyncratic issues in some pockets of the emerging world. Clearly what's happening in Turkey has worried some investors, but really what we're believing in and what we think is that there's pockets of value now emerging across the emerging market. When you think about them from an external vulnerability perspective, clearly emerging markets have much stronger macro scorecards than they did in 1997 or even during the taper tantrum in 2013. I think most importantly, though, the health of corporates and companies is far stronger than it has been in a long time. And this is because over the last 6, 7, 8 years, a number of companies have been paying down debt, strengthening their balance sheets, becoming far leaner businesses. And I think they're in a good position now to take advantage of resurgent growth.
What is your assessment of the impact of the rupee, which is weakened quite a bit, and oil, which is quite a bit higher now, playing out for India? I mean, Indian stocks essentially.
So I think one of the interesting things about the dislocation between the macro in India and the micro in India is something that has surprised a lot of investors this year. If you were asked at the beginning of the year if oil prices would be where they are and where the dollar would be this strong, how the Indian market would have performed, I think many people would have expected a far more negative return than what's materialized. And I think there are a couple of issues at play. I think when you do get this investor anxiety or risk aversion in emerging markets, there typically is a flight to safety within the emerging world. And I think India's macro scorecard has been stronger than other players, even though it has deteriorated recently. And secondly, it comes back to this question of what we're doing as investors, and that is investing in companies and their cash flows. And I think the discerning or the discriminating way in which companies have improved their return ratios, they've improved their balance sheet structure, has allowed investors to view them much more favorably in a more challenging macro environment. So, where we are today, it's perhaps surprising that the Indian market has held up so much, but I think that's the change in investors' perception, that it's the micro that matters much more now than the macroeconomic noise.
Okay, what are your top India ideas, Kunal?
With India, you have a huge array of very strong business models. You have secular growth, which is the same and is accelerating in a number of subsectors. One area which we're particularly interested in at the moment is within financials, and in particular the small finance banks. So companies who have invested in improving or extending their branch network, they've taken the time to become safer business models through taking on deposits, and are now seeing operating leverage move in as loan growth accelerates and credit quality improves. So financials, particularly in the smaller cap or mid-cap part of the market, good quality businesses with strong management teams, I think are particularly attractive. One other area which I think will incrementally get more investor attention is in the pharmaceutical sector. Clearly there have been a number of companies been under stress. They've had all sorts of issues, from FDA concerns to buyer consolidation in the US. But I think they've now reached the point where there are a lot of attractive opportunities, given the resilience that they have, strong balance sheets and a very strong domestic product profile. So those two areas, I think, will be particularly interesting, particularly if you have a view that the dollar may result in further appreciation. And I think these two sectors offer good value at the moment.
Okay, sure. You mentioned financials. What would your view be on banks?
On the banking sector, clearly there's a split between the public sector undertakings, the PSU space, and their private competitors. Whilst you've seen some of the more corporate-focused lenders, such as ICICI and Axis Bank, face longer issues, particularly on their asset quality, I think at the margin now, that for us is beginning to come to an end. From a public sector perspective, I think there are still issues at play. I think capitalization or recapitalizing their banking or their balance sheet still needs to continue. So we're perhaps a little bit less optimistic or a little bit more negative on that side of the market. But really it's the more niche, nimble, lean businesses who don't have the sunk cost or sunk investment of having been through that last credit cycle that are most interesting to us. So your classic microfinance players who are now moving into vehicle financing, I think that's the more attractive area of the market from a financials perspective.
Okay, Kunal, thanks very much. Interesting conversation. Appreciate you joining in with that perspective. Ashwini Gujral is now joining in, and we're talking technicals now. Ashwini, thanks very much. So there is some recovery, not much. But point is that the market isn't selling off either, right? I mean, if one had a negative view, yesterday the market sold off, but no real big follow-through in that sense.
See, the way I look at this is, yesterday you were at 28,200 on Bank Nifty futures. Right now you are at 27,780 thereabouts. And the market, as it opened, it fell. So basically there are people stuck at 28,200 also. So we are moving away from the highs and not moving towards the high. Recovery is there, 20-point Nifty easily can be recovered. But the issue is that stocks like Hind Unilever, Jubilant Food, Bata, it's a broad-based sell-off. So, if you look at the longer-term picture, weekly, monthly charts, it looks like the market is getting into a multi-day style correction. We are at the lower end of the range from where we used to jump back fairly sharply. Right now we are just hanging around there, and we could have an equivalent fall on the downside, maybe another 200 points on Nifty, another 500-600 on the Bank Nifty. Crude or rupee, nothing is showing signs of reversing. So this sort of macro move will not encourage a lot of people to buy, and anybody who's buying this dip is likely to be sorry, maybe tomorrow, day after. So that way, this looks like a macro EM move. So I wouldn't get overexcited to buy a 2-day dip. My sense would be if you get a 5-7 day style correction, that could be much better for the health of the market and overall for riding the next move on the upside. Septembers are known for being very choppy. Individual stocks, Jubilant Food is a sell with a stop of 1460, target of 1400. Bata is a sell with a stop of 1055, target of 1020. And TCS is a buy with a stop of 2075, target of 2160.
Okay, let's get in some Twitter queries then, Ashwini. First one is Milind. He has 1,000 shares of Vedanta at 295. Wants to know long-term view.
See, people don't understand, how metals should be invested into. Metal stocks, you need to invest when they are going out of business. I mean, if you buy Vedanta at 300 in a bad metal cycle, you'll find it at 60 bucks. You basically bought the upper end of the range. So 295, 300 is going to be difficult. Only thing he can do is, keep averaging down, and one day that averaging down may help him. But otherwise, this is a stock which has been bought incorrectly.
Pawan Asrani has 300 shares of Tata Global Beverages. He's paid 315 rupees each for them, and he wants to know the view on the stock. Ashwini, Tata Global, what's your sense?
See, again, stock used to hang around at 120, went to 315, now off. Basically decent stock. Use this decline to average down, and only then you'll be able to make money easily. So as you can see, market at new highs, but a lot of stocks are not at new highs, and that's where the problem is. So wherever you think that companies are decent, try to average down, and chances are you may get your price.
Okay, all right, Ashwini, we're going to let it go on that note. Thanks very much for joining in and talking to us.